Hello traders, hope everybody had a great week and I hope you're having a great weekend. Going to do some analysis here on the E-mini S&P futures as well as the NASDAQ 100. Before we get into anything, of course, this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. We're going to do a little dive into the economic calendar. Of course, no real earnings this week that really are market movers. We do have Target, Zoom. Again, we're really on the lower tier names until finally NVIDIA reports, but that is not this week. So not too much as far as earnings that we have to look over. We're coming to the tail end of that. But it's been an incredible week again for the bulls. Just bid up, bid up, bid up, and they are really showing their strength. So let's go ahead and take a logical approach, looking at the market, see what the next moves may be, some key levels, and of course, some other data points that we like to look at to help us gain confluence with each of our scenarios. All right, so as always, we're going to get into the economic report for this week, see what we have to look ahead on that front. So let's do that now. All right. All right, looks like a pretty quiet week ahead. I like to see it. Monday, we don't really have much. It looks like we do have, I believe it's actually Jackson Hole. Is it this week? Yes, I do believe it is this week. So we do have some Fed speakers coming up this week. 9:15, Waller speaking, kicking it off. Monday, otherwise quiet. We do have Bostic on Tuesday at 1:35, and then at 2:45 we have Michael Barr speaking. Wednesday we have the Fed minutes from July. Usually not too much of a market mover that it used to be, but we will still keep that on watch. Thursday, more jobs data with initial jobless claims, flash services PMI 945, existing home sales 10 o'clock. Jobless claims will be interesting to watch. Just as far as a data point, we want to keep that eye on the labor market, and we all know the Fed is watching it as well. And then we do have Powell on Friday at 10 o'clock, speaking at Jackson Hole. So I don't really think that it will be too much of a market mover, but certainly everybody wants to hear what he has to say, considering are they going to raise rates, cut them, keep them the same. We're right at that tipping point here where the Fed is probably going to be making a decision pretty soon with what they are going to do with rates. So although I don't think it will be too much of a market mover, a lot of people will be listening nevertheless. Okay, that's all we have for this week, so it looks pretty quiet. I'm not too concerned about anything really on the data front. All right, so let's start to break it down here and get into some of the charts. Of course, we're going to start with the largest time frame first, out here with the weekly. And we started off last week marking out last week's range. And you can really see, what happened here. We were looking and noting at the strong tail, right? Showing the strong buying coming in here. Not seeing the sellers being able to hold price down here for very long. And we were really looking at that 5,400, right? We talked about the tie of last week's range, which was a little bit lower than 5,400, but we said over that it should give us the shot for the next move higher. And really, we went even higher than I anticipated in that shot, because we did talk about that next 5,500 being the next key pivot, right? That needed to be recaptured for the bulls to really start to look a lot stronger. So what are we going to do here? Well, I am going to now, of course, we're going to mark off at the high here on ES of last week's range as well, because we're going to want to know that, and that's at 55.86 quarter. 55.86 quarter. Okay. I'm not going to do it now, but it's also helpful if you set an alert there. If you don't have the time to monitor the market You can set an alert there as well, just a useful tip. And we're going to watch the weekly low coming in at, wow, 200, nearly 200 points lower. 53.47, 3/4. Wow, unbelievable. What a move. 47. $75. Okay, so there we have our previous week's range mapped out. What I'm also going to keep here, I'm going to get rid of last week's low, but what I am going to keep on here is last week's high, because I do want to keep that, well, excuse me, 2 weeks ago, the week of the 5th, August 5th high, I will keep on the chart just under that 5,400, because if we happen by any small chance to see a move below that, I think that that would be important to know. Okay, so if we just look at this weekly candle, and if we're just going to do some analysis here on this candle, what are going to be two things that I'm going to watch? Well, we often talk about, we're either going to look for a 25% retracement, right? As long as it holds 25% of this candle's range, we can consider that the most bullish. Consolidation for the next potential move up. Okay, why is that one there last? Okay, let's just do 25% again. Why did it just turn my thing to yellow? I don't know. Okay. And then we have our 50% retracement. And that actually has really nice confluence here. It's hard to see a little bit, but the weekly 9 is pretty much sitting right about 50% of that range. Now, what I think is interesting is that the 25% is very close to the recapture that we needed to see in structure, right? We were talking about this level right here, and we can just mark it out. But either way, it is, yeah, that 5,200, right? That was the structure of right, this head and shoulders on the weekly that ended up playing out. This was the neckline that caused us this move down. So now we have, that was really one of the last bears' last chance for anything significant. Now we do have another key level up ahead that they do need to get over, which we will go over in a moment. However, it is safe to say the bulls have done everything that they needed to do to really show me that more than likely we will drift back towards those highs. Of course, it won't be in a straight line, never is, but as long as they're holding over these key levels, there's really going to be nothing that shows me too much of a bearish inclination at all on the chart. And as you know, of course, we always just look at this objectively, right? We try not to come in with any bias. So again, we have either the potential of a 25% retracement here, high and tight for a flag consolidation, boom, and then we can break out, or we get more of that mid candle retracement here coming in maybe around 54.75, another spot, and that really lines up very closely. Now, of course, this value is going to change, but there you go. It's very close to that weekly 9. Now, that was, of course, one of the things we were looking at last week, where we weren't sure if the market was going to be able to recapture that, and they certainly now have. Okay, so, and we were looking just very closely right at those macro trends And we talked about this, right? What were we really retesting? Boom. Okay. So let's now get a little bit more granular. We're going to go back here and just take a look. Okay, cool. We're on the daily. And take a look at our old drawing set before we kind of create a little bit of a new one. Right, this was, now we're on the daily chart here. And here's that 5,400. Here again is that head and shoulders. Oh boy, that was ugly. That I was just drawing out on the weekly. Right, so neckline recaptured. Now we're back into this previous zone. So if at all, and you can see here we're matching these highs. So we are coming into an interesting spot here. So let me actually, let's clear this one off now and kind of map out some areas for us. Right, so we already talked about the neckline. Okay. Now what the issue is, right, we have these matching highs here. So we have to be cognizant, and it's really a zone, because what's the next area of structure? The final area of structure before we truly can say, all right, we're going in here at those equal highs. Okay. Right here. This area here is the final boss. We could say the high of the 23rd or the low of the 17th, which is going to be around 5630. Yes, I think that that's fair. 5630. Okay, so what we can do, I'm going to put a zone from here, because again, we can see here multiple reactions from sellers all up in this area. So really, if I want to match the highs completely, it's going to be about here. Okay. So we do have some supply. No, not the price level. We do have some supply liquidity here mapped out. And we have to just be wary of seeing some possible sell reactions as we've come up here. I mean, and look at this move. 1, 2, 3, 4, 5, 6, 7 green candles in a row. Unbelievable. Furious bulls. But let's look at this candle here at the top of the trend coming up. I need my boy Garlic. Hanging man? I don't know. Either way, I welcome. We can drop 80 points and still be fine. So we've already established that. It's going to be pretty much a slower week. I also would just not even be, this was the first scenario, the most bullish scenario. 80-point range can be traded. Not bad. High and tight for the next move or the next test to get into this area. Am I interested in hitting along here? No, I'd much rather wait to see if we can get any pullbacks to even 55.50. So that will be very interesting to see. Now, we certainly would want to watch the previous session low, right around 55.3650 for Monday. Right, as long as we stay over that, again, still have to stay bullish there. So I welcome any pullbacks within this area, 55.30s down to 5500. I'm good to take any of those. That mid candle that we were talking about is going to be right closer to this daily 9 and 20, which are attempting to cross right here. Nice confluence as well, just from a technical level perspective. You can see here this zone has been respected many times, and it lines up pretty much, right? Oops, get that little... There we go. With this, actually, the moving averages are just peeking over it now. But it's this prior balance right here. And a nice Wyckoff spring action here with this fake break. So here are your long zones, right? And yes, breaking under 5,500, not ideal, but we still have all this area here that the bulls are totally fine coming into. Again, under 5,400, okay, then we're going to start to get a little bit nervous. I'll mark it off. Right? And I can do this. Okay. So I would just watch out. Let me mark off these other levels here for us. There we go. So I would watch out again for a little bit of that consolidation. Huge move. We've got these scenarios. And under 5,400, look for us to trade more into that 50% retracement of last week's total range. Okay. So I really wouldn't be interested in any shorts, any meaningful shorts, unless we get under that 5,400. But we could still pull back here and just trade. I mean, volatility now is at 14. Just disgusting. 1480. I'm missing that 30 VIX already. It's possible we get a 40-point range again on ES. Just between these equal highs. Friday's low, maybe a little bit lower. What we want to also watch out for here is if we look above here, spend some time and fail back under, I would think we would see a bit of a stronger reaction to the sell. If that happened, I would not suspect that we would hold the Friday low, and I would probably be looking for that 5,500 retest. I would call out that scenario as a potentiality. Something to watch out for. But that's only if, again, we get above that 55, 85, 87 area, kind of hang out. You can see here, it did it here. And then we fall back underneath. So that is one bearish scenario that you can look at it out for. And that's 55.80 all the way down to even if it only goes down to 55.30, that's still what, 55 points, 50 points depending. all the way down here is, 85 points nearly. 80 points. So that's still a great move, without a doubt. So interesting spot. Watch out for some chop. Watch out for some digestion. We had a huge move here. I think sideways to slightly down would be the more likely scenario, but open to every scenario, every case. We start really getting back over the 55, 85, 87, and truly maybe we really need to get over that 5600. You can certainly make that argument. It's only 20 points higher than that, 11 points higher or whatever than that. All right, then we're game on to come up into the 5630s, right? We'll match up in this area, and that's going to be the next big test. So if you're really looking to get bullish, look for that. I wouldn't be getting in here personally. I'd much rather, again, those pullbacks for something like that. But if it just continues to rocket, we see a couple of days accepting here. Okay. Then we've got a potential trade. But do I want to hit it right here or jump into a swing tomorrow long? No, I mean, if you're not already in, of course, that's no. Just no. So it's in the ball. The ball is in the Bulls' court once again. And we were kind of mentioning, we saw price come right into the 200. We saw the buy reaction. That's not a bearish thing to see. We also were looking back. I'm going to jump right into the weekly really quickly again. And what were we saying, right? Low, higher, higher low, higher high. This looks like it's just end up being a higher low in the sequence after we made this weekly high. But it's anybody's ball game here. I think we'll just end up going down, sideways, slightly, and then breaking over, personally. But we'll see. The thing I don't like, again, as I mentioned, I would much have loved to see this really cool off on the weekly. Gosh, if we had gotten down to the 0, we would have been fresh for probably more than 6,000. I still think if we break over the last swing high, I mean, I don't think why 6,000 really is that crazy on ES. I mean, yeah, I think it can be done. Bearing some black swan. We're hearing these people talk about the monkeypox now, so God knows what's going to go on with that. Just in time for the election, right? Looking really quickly one more time here at the daily. Strong shift, plenty of room here to get back into any type of overbought or type of scenario. So we're good here on the daily for more upside. Nothing concerning there. All right, let's get into the NASDAQ. And I was just thinking about it while I was going over the charts. I actually do not have the day trading levels set up. And I realized that. I started recording and I don't have it out. So what I'm going to do is I'm going to tweet them for everybody. And that way you'll be able to have them. My apologies. All right. Let's get into the snazzy Naz here. Take a look at the weekly chart. Okay. Let's delete all these drawings. All right. Same thing on tech as far as the trend sequence is concerned. we're going to, of course, map out just look at this size of this green candle that I put in. Map out the session week high. Boom. Now this is interesting. And the session week low. There we go. What is the high here? It is 19,683. Okay. Now, interesting. We have a clear sign that tech has not done what it needs to do. Tech is still vulnerable, and I think that this is a little bit of the canary in the coal mine. Just one thing we want to watch out for. You can see pretty clearly, right? We have the same type of head and shoulders pattern right here. This was the neckline, broke. You can see confirmation of this being key here, right? And where are we now? All right, you probably don't even need you don't need an arrow for that one. So, Qs have not recaptured the structure that ES has. So let's note this divergence. Tech is still a little bit vulnerable, and ES is not going to be able to continue without tech. So we did not actually match another interesting point, pun intended, for futures. Here is that we couldn't actually match the equal highs from the weekly high of the 29th, which is at 19,717. It's a little bit lower. That would lead me to think the more likely scenario would be that we see that pullback in ES as well. And as well and in tech. Now, nothing crazy, of course. And it's very interesting here when we were talking about our weekly candlestick analysis. Right here, about that 25%, maybe it's not, maybe it's actually closer to the, if I was to do a fib, this might end up being the 38.2. But a little bit higher there. I'm sure this moving average is going to creep up. It's about that 25% retracement. You know, and 50% probably. Maybe it's a little bit higher. Just kind of eyeballing it. If you really want to get it perfect, just come in. Use your fib. Boom. 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 There it is. So really, even you could say we are trapped right here. I mean, there's this balance here. Right? Flagged, run, rest, balance, expansion. But overall, we're in the upper deck. We took out this balance, right? But now we're in like the upper deck of a bigger balance here. You have to just be very cautious unless we take out the weekly low of the 24th. So it's right around that 19. This weekly low is 19,726, call it 725. The weekly high of the July 29th was 717. So unless we see basically over that 725, it's another 100 points. So it could, that's one day, one bull day. Sorry. So what we need to see here from tech is a push up and over, retest, and then I personally, at that point, would be targeting the weekly high from the 22nd. Right around 20K, just a little bit over. Maybe it's 21,000. Oh, I thought it was 21,000. It's going to be 20K 84. That would be the most likely scenario, in my opinion. Okay. So very interesting. A tale of two markets here with ES and the NASDAQ. And I think that since we're coming in, we didn't match the equal highs. We're coming into this big area. I would be more in the camp that we probably will see somewhat of that pullback. I think that would be healthy regardless. And then we can just pull back, consolidate, and then make that, build up that power to make that next move. So I'm going to say, again, if we accept over that 19,725, more than likely, we're going to see over 20K again on the snazzy NAS. That's my call. What needs to hold here for the bulls? Well, certainly it's going to be that high of the prior balance here from that weekly perspective. Right, we really don't want to break under that. So let's also take a peek here at our chart that we had from last week. And you can see I have it already mapped out. Kind of spoke about it. Here's the 725. So let's just add on where I think we can potentially target. The weekly high from the 22nd. And I think actually we get over that, and I think we can get up a bit higher. But let's go back to this chart and just look at something else from that structural perspective. Where else do we really need to, and let's actually get into the daily. It's going to be the next major area, right? Is this breakdown area. So can just map it out. Okay. Probably needs to go a little bit lower. Get some of those bodies in there. I think that'll be fine. Okay. Daily 9, 20, starting to come together. Nice confluence right here with our weekly level. Pretty much right around 19,100. Have to note we are getting over this value area high here. It can stay over, obviously, as you see that we traded above it for quite some time, but we do have to note that. We might want to pay attention to that 19,3, what is it, 382. So we break under that, I think we would be more than likely to come and probably come down into closer to that 100 area. So we'll pay attention to that. Another view here that I wanted to point out. Oh, that's not right. Here we go. Let's throw this back on the weekly. Okay. I'm also going to watch. Oh. If we happen to get any pullbacks around 300. It's 300 points down. That's one strong bear day. Nice confluence there with the weekly 20. So definitely be paying attention to 19,300. Confluence here, the 20 and this trend line. Something like this would be glorious. Right? Pull in weekly 9, boom. And then we make that next attempt. I think that may be what is needed to really give us that springboard to break through that neckline. Just a little pullback. We collect a bit more buyers. And then maybe some shorts start to come in and get all excited again. And then they just rip their face off. Like they've already done. I mean, look at this. Where did we... 17,400 to 19. Oh my god, 3,000 points. Just unbelievable. So they're not going to keep this market down into the election, into the end of the election. That's not going to happen, right? So I'll be looking for that pullback into something like that. Do I want to enter new money long here? No, of course not. Right? We've already talked about the multiple reasons why. So, all right. I think that's everything that I wanted to go over for the NASDAQ. Trying to think. Every time I stop recording, there's always one more point that I was like, oh, shoot, I really wanted to make that. But I think we're good. We can also just look at this too. I mean, you could even, if we do start to pull in to these daily 9 and 20, we can just make this case. Oh, it's the wrong one. Whoop, whoop, whoop. Pull back into here. Inverted head and shoulders. Oh, I'm not redrawing that, the whole thing. Pull back into here. Inverted head and shoulders. Pull back, hang out, hang out, hang out. We break the neckline and boom, we take off. So there's that scenario as well. But we can definitely say the downtrend here hath been broken. Right? So definitely a change, in our delivery. So let's see. It's anyone's ball game, at least for NQ. ES is way, way stronger. All right. Let's move right along here. The dollar, what's going on in dollar Dixieland? I don't think too much. Probably going to still see this drop lower and the yen go higher. This just looks like it's about to fall off of a cliff. Big H there. And looks like we'll more than likely come back down to the previous lows. Down towards 102. Start getting under that. We're talking about 101.75 more than likely. TNX, what's going on with yields? Looks very similar to the dollar. So more than likely, it looks like it's going to come back down to around that 38 area. Okay. I'm trying to remember. Oh, how do I do it? Maybe I'll just tweet it. I wanted to pull up the 10 and 2 year so we could look at the curve, because a lot of people certainly, and I wanted to point out, a lot of people definitely are talking about the steepening again of the yield curve, and it is definitely something that we want to pay attention to. Usually a leading recession indicator, and I just wanted to pull that up for you guys and show you what it looks like. And because we were right pretty much on the zero line, but I don't remember how to do it on here. I know there's definitely a way, but this is not it. I'll have to post it. But we're getting real close to that steepening, where you're getting a higher yield on the 2 year versus the 10, and that means that people are pricing in more risk. It shouldn't be like that. You should get a better yield for the 10 year. And now we're getting a better year in the 2 years. That's the whole thing about it being quote unquote inverted, because it's opposite of what it should be. And usually when we see that, it means a recession could be knocking. But I'll post it up because I can't remember off the top of my head now how to pull that up here on Thinkorswim. All right, let's get into some of our other data points that we like to look at to help us gain confluence with our perspectives. And we have to say, for the most part, we are slightly, I would say, pretty much on Team Bull. Once again, 100%. And let's start both. Oh, here we go. I was looking for VIX. Oh, wow. Look at VIX. Just dumpster fire here. I mean, what a move. Sucking all the volatility. 65 high. The VIX is just melting. I thought we would, I was also hoping, just from the trader perspective, that we would hold here. And then we could come possibly up here and come back down. And we trade maybe in this range. But no. No fun. Crushing volatility. Killing our ranges for day trading. We're under our 15 mark. We're under our 1575. So as long as it stays under this, more than likely volatility will continue to decrease. Probably head down to that 13 handle once again. So hate to say it, hate to see it, because it's way better to be day trading with the higher VIX. But this is what we're more than likely what is going to happen. Let's see if I can get back over 1575. Get a little bit rowdy again. Maybe make moves back up into the 18 area. Only if we recapture 1575. Put call ratio showed us that extreme level for a buy signal up here. Now normalizing again right around our 70 marker. Nothing extreme there that we need to pay attention to. Let's move it along to how many stocks are trading above their 50 period moving average and 200 period moving average. Nice moves here from the 50s. We will watch as it comes into this area here. You can see, oop. Swing high, lower high. Is this a lower one? A lower high? Maybe. Interesting there. So we'll watch that. This would again lead me to believe if this does play, this would give me more of that pullback type of scenario. Maybe we come down just a little bit to 60. Then we push up higher, break through the trend, and get back up into those 75% readings. Maybe we get something like that. 200 moving up. Not seeing over the 75 reading yet, though, but we were talking about that this was basically, you know, in a balance. So we can just meander in this zone. Still over the 50% marker, so nothing really to report there. New highs versus new lows. What are they doing? You know, the RSP is looking good. Let's pull up the RSP while we look at this, because I just posted about this on my Twitter. I like to look at the RSP, kind of to take a look at the overall breadth in the market. But we are at least over the zero line here on new highs versus new lows. We had this area here where we kind of went sideways. I took that out. I'm gonna just... So even if we pull back here a little bit into the 82 readings, down, something like that. But much more firm above the zero line, which is good. And you can see that really illustrated here in the RSP, breaking over this key area that it needed to. Let me just pull up a regular chart. You can see here, this area had been issues before. Boom, boom, boom. Hung out, hung out. You can see it broke under, came back, retested. So now it has recaptured. So as long as the RSP basically holds over 168.50, got the 9 and 20 moving right under, crossing under. It's going to sneak up into that area probably. Just watch the highs from August 14th. As long as that holds, it can pull back anywhere into there. I like longs there and target pretty much to come back into the equal highs or very close to around that 172 area. So would I hit a long here? No, I wouldn't. But you know, anywhere in this area, if we start to pull back and then look, 4 moves back up, 172, maybe 173 area, maybe the high 172s, somewhere in there, I think could be a nice target for that. But seeing the RSP, if the RSP was still under here, but we had SPY making this new high, or ES, that would be a red flag for me, right? Because we're only seeing that the expansion of the move upwards is not concentrated, right? Because this is the equal weight S&P, right? This is every company weighted 100% equally within this ETF versus SPY is weighted. You know, Apple has a little bit more weight, Microsoft has different amount of weight, etc., etc. So I like to look at this because this just helps me kind of look at what breadth is really doing throughout the market. Nice curve here, plenty of room. Junk bonds, any interest? It seems so. Just a straight rocket ship. I would say this is a risk on. I mean, because these are the crappy bonds, which is interesting that they want them. Before, we really saw them coming into the TLT, a little bit more quality. But this could be because of the inversion a little bit with the... Well, I don't know what the maturity rate is on the high yield, to be honest. But you can see here, too, on SPY, how this has recaptured that neckline versus Qs. With VIX futures, we are out of backwardation. Back in contango. Back over the zero line. Exactly what they wanted. Bulls needed to see. What we needed to see. Both of them. This is a bullish data point for sure. It can come back and head up again. Risk is getting priced out. One bearish point here. VVIX, of course it collapsed nearly $90, but we're still over the 103, 105 basically. I would say that if this doesn't get under much lower volatility here, this is interesting. Still being over 103 more or less, 105. Gonna watch this. This is one potential canary in the coal mine. Again, not that we're going to head back towards the lows at where we were, but that there's a glimmer of hope for some volatility still in the market. This could get a little bit of a move and then eventually come back down. But this data point would give me more of a confluence to think that that slight pullback would be more of a scenario, likely scenario. We see VVIX and VIX jump up a bit and then fade back. So let's see there. That's interesting. How are they feeling about the 7-year bonds? They still like it. TLT pulled back like we thought, but they're coming back in. Everything's still pretty much bullish here. Just looking at that trend sequence, right? We've got our swing low right here, high, right? We made a new swing high here, higher low, coming up. Let's see what happens when it gets back up. Where is it now? 97.45, 44. Keep an eye on when it gets back up into the 98 area, 98, closer to 98, 98.50 zone, but everything looking bullish here as well. Starting to get a little spicy, but not quite there yet. Seems to me TLT is going to attempt to match these equal highs. See if they can do it. And let's take a look at the Dow. Making its way. I'd like to see transports a little bit higher to match. It's bouncing, but not quite as strong. From this view, just seems like the Dow is going to be heading back. I would say the Dow holds, I mean, you could even say 40K, but, you know, because 70 points in the Dow really isn't that much. But 40K, 40,075, hold that on the Dow. Probably be pretty likely we're going to see 4,100, about 4,115 or 20 area coming up back to the high from August 1st. So pullbacks into there for longs sound nice. Something like that. The most bullish thing, you know, that high, that same high and tight, flag it out. Maybe even if we get over the August 1st highs, we'll probably more than likely see the highs from July. Okay, so most things looking bullish again from my perspective from next week. More than likely, slight down, sideways, build up some momentum, pick up some more buyers, maybe trap in a little bit more shorts, and then we give them the face ripper up higher once more. Either way, we have a plan for both sides. Like I said, I apologize about the day trading level, so I will post those at a later time. So make sure you are following me on Twitter at _shark_trades. You can find me there posting every day about market updates intraday as well. If you enjoyed the video and this is your first time joining us, it means a ton to me. Small thing you could do, a small favor, doesn't cost you anything. Like the video. Tell me what you think. Lower, higher? Anyone's open to the comments to let me know what your guys' bias is coming into next week. And overall, will we see that pullback? Will tech break that neckline? It's anybody's guess there. But like I said, we have a plan for both sides of the market as always. So remember, trade your plan, plan your trades. A prepared trader is a profitable trader. I really appreciate you guys spending the time with me here to prep for the market. And as I mentioned, if you're new, think about subscribing to the channel. Turn on those notifications. If you have been a loyal subscriber, follower on Twitter, someone that interacts with me on a daily basis with my posts on here, love all you guys. Really appreciate the support. Again, I hope you have a great weekend. Relax for the rest of the night. It's Saturday. And then let's see, do a little prep, and we'll get that market next week. All right, guys, take care. Have a good one.